Good afternoon. Today is Monday, the 15th of October, 2007. The market's closed. S&P 500 lost $1.44 today, just about 1%. Last couple days I've been thinking that as extended as this market has become, and just after that big shakeout day that we saw last Thursday, I thought that maybe we were due for a test of the rising 20-day moving average. And that's what we got today. You can see that the market came right down towards that 20-day moving average, and it did find some support there, and we got a little bit of a rally here late in the day to save it from a complete meltdown. But it is still just, kind of toying with the lows from that day. So far, it looks like not a lot of damage done. But again, on the 10-minute time frame, we had this trend line break right in here, and that was last week. Now we've got this level here that's broken now. So we do have a lower low in here today, but we also have a, let's take a look at that. That's not updating properly, so let's just change it, see. Okay, so we do have a lower low and a lower high right in here. So we still have to be cautious. We have a declining 5-day moving average, and we were looking at the 30-minute time frame last week and looking at this this trend line that's been in existence here. So we're kind of, I'd say, neutral right now. We've got, this lower high, as I pointed out, and we made a slightly lower low today, but it didn't hold down there. For some reason, that chart's not updating there. That's where we are. So that low didn't hold. It did come back up above that level. Just, I guess you want to continue to be cautious in here. The level we were looking for as support was the 154.70 to 154.50. So it's encouraging that that did hold. And again, that was just the lows from last Thursday. So for now, I'd just say neutral on the short to intermediate term, but longer term, we're still in a very nice uptrend. So benefit of the doubt should go to the buyers when we have that type of situation. Now, I guess this actually did happen in the semiconductors. I was looking at it last week thinking that I had bad data, but I guess they broke down hard on Friday. And they are below that 200-day moving average. So the semiconductors have more trouble than the rest of the market overall. And I think you just basically want to stay away from that for now. The IWM, last week we saw what I was saying was the first signs of selling in here with this sell-off. I pointed out that we had a flat and now declining 5-day moving average. We do have a lower low, and it did close below that low in there. So you have to be a lot more defensive on these stocks in here. The level of support that we're looking for was right around in this area here, right around that 82. So right now we broke below the 82.5, but are holding above that 82 level. You can see that 82 level in the daily time frame is prior resistance, as well as the support from about 2 weeks ago, and also the location of the rising 20-day moving average. Early on in uptrends, the market typically finds support along the rising 10-day moving average. As the trend becomes a little bit more mature, more people have profits, shorts become emboldened as well, then we see the pullbacks usually find support near a rising 20-day moving average on that second test. There aren't any signs of real support in here yet, so continue to just be neutral short term, but overall, again, benefit of the doubt going to the buyers in here. Let's take a look at that 30-minute time frame. On the 30-minute time frame, we'd been looking at this trend line, and this trend line did hold up through until today, obviously. And here's that 82.5 level that we're looking for as support. So really, we need the market to get at least back above this, actually probably about 82.80 or so, before we can be a little bit more optimistic about the way this market looks. And we also, of course, want to see this 5-day moving average at least begin to flatten out to maybe start turning higher, like we saw over in here. And then the market rallied, and we want to give the benefit of the doubt to the buyers as long as the 5-day moving average is advancing. It turned neutral in here. That's when I turn neutral on the market. Now it's turning lower. I think you got to be a lot more cautious. But again, the longer-term time frame does trump the shorter-term time frame. When we have mixed signals from multiple time frames, it means that basically we want to just kind of take it a little bit easier in there and wait for confirmation that we have alignment of trend on multiple time frames. By the way, that's something I'm going to be talking about tomorrow in the online course that I have. It's a free class. You can sign up at marketwise.com. Please don't email me with details because I'm not going to type out an explanation of what's covered in there. But go to marketwise.com to sign up for that. It's free. And let's see. Let's go back to the Qs now. The NASDAQ 100. Again, it's an extended market. It's still finding support along this rising 10-day moving average. The market seems to be tiring a little bit, but no damage done. You know, technically, really, on the daily time frame, when we get down to this 30-minute time frame, you can see here that we've still got this trend line that is holding in here. So that's good to see. And we do have you know, this market didn't take out last Thursday's lows as it did in the IWM and the SPY. So this market continues to show some relative strength. But we've got a flat moving average here. The 5-day moving average is flattened out. And that means you just want to be a little bit cautious in here. I think you want to wait for confirmation that the buyers can retake control up above 53.75 or so. $52 was the level that we're going to look at as potential support. I still think that needs to be an area that you keep focused on. And also this trend line here on the 10-minute time frame. Again, lower highs, higher lows, confusion of trend. That means that you just generally want to take it kind of easy right now.